But let's move on. BEML reported a good set of earnings with an operational beat in Q4 led by margins. The company clocked the highest ever EBITDA margins for the last financial year. My colleague Vivek actually caught up with Amit Banerjee, who's the chairman and MD at BEML, to discuss more on their Q4 performance and began by asking him on their revenue mix and how they see imports versus the higher margin exports business panning out. Listen in.
Q4 and also in the last financial year, there has been a dip in the revenue, but the profit margins have gone up considerably. That's because of the product mix. We had exported certain equipments to Cameroon to the tune of almost 150 crores. And we were also doing the rail grinding machine for Lorem of USA. That's going to be supplied by Lorem to Indian Railways. So because of these two things, our margins have been slightly better as compared to last financial year. And going forward also, there is presently we are having an order book of almost 9,000 crores plus. When we started this financial year, it was 8,500 crores. And this last particular month, we received an order from ICF for the Vande Bharat 10 train sets. That is for the sleeper version. That's a joint development being done by BEML with ICF. And the work has already started. And the first proto rake is planned to be delivered in the last quarter of this financial year, and followed by the balance 9 train sets. So we are hopeful that after we complete this initial 10 train sets of orders to ICF, there will be further of Vande Bharat orders for us. The other thing which I would like to mention is the Bangalore Metro 5RSDM tender, in which we are L1. And possibly by next month, we are going to get this order. And that will be for 318 cars. And the order value is expected to be around 3,100 crores plus. Plus, some more variation orders are also there in this along with this tender. So that also we are hopeful of getting it.
So if we understood you right, we understand that you now have an order book position of around 8,000 crore, where you've also mentioned the Vande Bharat order as well as the Bangalore Metro order. So thank you so much for that clarification. That was going to be our next question. We want to delve a little bit more into the profit margins. Operationally strong quarter, like you mentioned, and we believe it's been aided by lower raw material costs as well as better execution. So going forward, how do you see raw material prices trending, and will that aid operating as well as profit margins?
Going forward, see the raw material costs, it will be stable. I would not say our profit margin last financial year was due to lower raw material costs. It was because of the product mix. And going forward, the raw material prices will be stable. And we hope to increase our margin with the better product mix. Especially, we are expecting some more export orders. Already, some orders are there from Russia and Indonesia. We are also in talks for Mozambique, supplies to Mozambique. And these export orders will improve our margins quite a lot. And we are also still executing the rail grinding machine project. And further, like defense orders are also on the anvil. Already negotiations and all have been completed for the high mobility vehicles. Plus, we are also delivering the Pinaka vehicles. That's to the tune of 330 vehicles. And because of these product mix of defense and rail and metro, our margins are going to be better as compared to last financial year also.
So I wanted to quiz you a little bit more on the mining and construction equipment business. We understand that the government has gone ahead and banned the import of certain materials or certain equipment that are used in that particular segment. So what is the opportunity size that you see for BEML there? Would you be able to do an import substitution, and what would be the opportunity there?
See, with regard to the import substitution, the high capacity equipments, especially the dumpers to the tune of 200 tons capacity, then 180 ton excavators, then the high capacity dozers and the motor graders. In this, we have already supplied the high capacity dumpers, excavators and dozers. So in the future tenders, we expect to get these orders. And high capacity motor grader is also under development. Then we are also tire handling equipment of a higher capacity, 8-ton capacity we are developing. So these businesses will be coming to BEML. Of course, there will be competition from Komatsu and Caterpillar also.
Understood, sir. We also want to understand, the guidance that you're giving us as far as FY24 is concerned. You already alluded to the fact that margins are expected to be stronger. So revenue, margins, bottom line, as well as the kind of order inflows that you're anticipating going into FY24.
First of all, let me talk about the order book. Order book, by next month, we are expecting it to cross 12,000. And by the year end, we want to cross 15,000 to 16,000 crore order book mark. Now, coming to the revenue, we have a plan of crossing 5,000 crore in this financial year. But we are hoping at least we will cross the 4,500 crore mark. And exports business, we want to grow. Presently, last year, the physical exports was to the tune of 178 crores. And we expect to do around 250 plus crores this financial year in the exports. Of course, the deemed export is also there. The metro codes cars are considered as deemed export. So with that deemed export, the total exports will be more than 1,000 crores this financial year. And margins, like EBITDA, we have just crossed 10%. So we plan to take it further ahead.
Okay, well, that is the BEML management with what they think of the business environment right now.